Are you tired of watching altcoins pump seconds after you sell? Or seeing a gem you were watching suddenly do a 10x before you ever got the chance to buy in? That gut-wrenching feeling of being one step behind, of missing out while others are celebrating, yeah, that feeling ends today. This isn't just another video with a few random tips. This is a complete guide that walks you through a 3-part system. We're going to combine chart analysis, on-chain data, and social sentiment to finally get you ahead of the curve. You'll learn how to build a repeatable filter that separates the high potential projects from all the noise and the scams. I'm going to show you how to spot the clues on a chart that signal a big move is coming. Then we'll look at the blockchain itself to see what the smart money is actually doing. Are they buying up more, or are they getting ready to dump? And finally, we'll measure the hype to make sure we're catching a real wave of interest, not just some manufactured buzz. Stick with me, and I promise you'll walk away with a complete, actionable framework. You will know which tools to use, which numbers to look for, and how to put it all together to spot a winning altcoin fast. All right, let's kick things off with the first part of our system, technical analysis, or TA. A lot of people think TA is some kind of black magic or that you need a PhD in math to get it. That's just not true. For our goal, which is to quickly find potential winners, we only need to focus on a few simple but powerful signals that tell us when a coin's market is shifting from bearish or boring to bullish. We're not trying to become day traders here. We're using TA as our first filter to build a watch list of promising coins. Think of it like a metal detector on a beach. We're just scanning the huge landscape of altcoins to get that first beep that tells us something valuable might be right under the surface. Once we get that beep, then we can bring in our other tools to start digging. The two main things we're looking for are trend reversals and momentum. We want to find coins that have been in a long downtrend or just sitting there doing nothing and are now showing the very first signs of life. Catching that early shift is where the life-changing gains are made. So how do we do it? We're going to use 3 key indicators you can find for free on any charting platform like TradingView, exponential moving averages, EMAs, the relative strength index, RSI, and volume. Let's break them down. First, exponential moving averages. Don't worry, the name sounds way more complicated than it is. An EMA just smooths out the chaotic price chart into a single clean line, making it easier to see the real trend. It focuses more on recent prices, which is perfect for the fast-moving crypto market. For our scan, we'll use 2, the 50-day and the 200-day EMA. The 200-day EMA is your long-term trend. Price below it, you're in a bear market. Price above it, you're in a bull market. Simple. The 50-day EMA shows the medium-term trend. The signal we're hunting for is the golden cross. This is a classic bullish signal that happens when the shorter-term 50 EMA crosses above the longer-term 200 EMA. This tells you that medium-term momentum is overpowering the long-term downtrend and is often the first major sign that a new sustained rally is starting. Let me walk you through it. Imagine you pull up a chart for, let's call it CoinX. For the past year, CoinX has been bleeding out. Its price stuck way below both EMAs. But lately you see a change. The price starts creeping up, first breaking above the 50 EMA. Good sign. Then a few weeks later you see it. The 50 EMA line itself crosses over the 200 EMA line on the daily chart. That's the signal. That's the beep from our metal detector. CoinX now goes on your watch list. It's not a blind buy signal yet, but it's a huge clue that the tide is turning. But a golden cross isn't quite enough. We need to confirm this with momentum, and that's where our second indicator, the relative strength index, RSI, comes in. The RSI is just a simple score from 0 to 100 that measures the speed and strength of price moves. You've probably heard that above 70 is overbought and below 30 is oversold. That's useful, but we're going to use it to spot something much more powerful, bullish divergence. This happens when the price of a coin makes a new low, but the RSI makes a higher low. Let me explain why that's a big deal. Imagine CoinX drops to $1, then it bounces a bit before dropping again to a new low of 90 cents. On the surface, that looks bad, right? The price is still going down. But then you look at the RSI indicator. When the price hit $1, the RSI hit a low of 25, but when the price hit that new low of 90 cents, the RSI only dropped to 35. What does that tell you? It's telling you that even though the price went lower, the momentum of the selling was way weaker. The sellers are getting exhausted. This split between price and momentum is often a super reliable sign that the downtrend is running out of gas and a reversal is coming. Finding a bullish divergence like this, right as a golden cross is forming, is an incredibly strong combo. Now for the final piece of our technical puzzle, volume. Volume is maybe the most honest indicator there is. Price can lie, but volume tells you the truth about how much conviction is behind a move. A price pump on low volume is usually a trap. A price move on high volume, that signals real, genuine interest. When we're scanning charts, we want to see volume confirm our other signals. There are two patterns to look for. First is accumulation volume. While a coin is sitting at the bottom doing nothing, you might see random, unusually large green volume spikes, even if the price barely moves. This can be a sign of whales quietly filling their bags without causing the price to shoot up. Seeing this pattern of quiet buying followed by a golden cross is a massive confirmation. Second and more important is breakout volume. Let's go back to CoinX. It's had its golden cross and its RSI bullish divergence. Now the price is starting to push up against a key resistance level, a price ceiling it couldn't break before. The moment the price breaks through that ceiling, you have to look at the volume bar. If that breakout happens on a huge spike in volume, like 3 to 5 times the daily average, that's your ultimate green light. That's the market screaming that this move is the real deal, and it's likely the start of a major new uptrend. So let's boil it down to a quick checklist for part 1. Scan daily charts for a golden cross, the 50 EMA crossing above the 200 EMA. Zoom in. Do you see any bullish divergence on the RSI, where price made a lower low but the RSI made a higher low? Look at the volume. Was there quiet accumulation at the bottom, and was the breakout happening on a massive surge in volume? If a coin ticks all 3 boxes, it passes stage 1. You now have a solid candidate for your watch list. Now it's time to see if the on-chain data backs up what the chart is telling us. If technical analysis is like reading a stock chart, then on-chain analysis is like getting to look at the company's private accounting books. It's the ultimate source of truth. Blockchains are public, which means we can see exactly how money is flowing in and out of a crypto in real time. This isn't guesswork, it's hard data. By looking at this data, we can confirm the story the chart is telling us and get a serious edge. On-chain can get super complex, so we're going to stick to the 80-20 rule, focus on the 20% of metrics that give us 80% of the answers. For our purposes, we need to know 3 things. Are people moving coins off exchanges to hold for the long term? Is the user base actually growing? And what are the biggest holders, the whales, doing? To get these answers, we'll use platforms like Glassnode, CryptoQuant, or Nansen. Many of them have free versions that are more than enough for what we need. Our first and most important metric is exchange net flow. This simply tracks the total amount of a coin flowing into exchanges versus flowing out. Just think about it. Why do you move coins onto an exchange? To sell them, right? High inflows suggest that selling pressure is building up. Conversely, why do you move coins off an exchange and into your own wallet? Because you plan on holding them for a long, long time. You believe the price is going way higher, so you're locking them up safely. Massive outflows are a very bullish sign. It shows that supply is being taken off the market and put into strong hands. So let's go back to CoinX, which passed all our technical checks. We now go to a platform like CryptoQuant and pull up its exchange net flow chart. If our TA was right, we should see a clear pattern of more coins consistently leaving exchanges than arriving. What you want to see is a chart with big green bars, outflows, towering over the small red bars, inflows for the past 30 to 60 days. This is a huge confirmation. It tells us that while the chart was forming that golden cross, smart money was busy buying up the supply and moving it to cold storage. With less supply available to sell on exchanges, it takes a much smaller amount of new demand to send the price flying. Next, we look at network growth. A coin can have a pretty chart, but If nobody is actually using the network, it's a ghost chain that's going to fail. The best metric for this is active addresses. An active address is just a unique wallet that sent or received the coin on a given day. It's a direct measure of user activity. A rising number of daily active addresses means the network is growing. More users are joining and using the ecosystem. For a utility token, this is fundamental. If CoinX is the token for a new blockchain, we need to see its daily active addresses in a clear, steady uptrend. A single day spike doesn't mean much. It could be an airdrop or some other gimmick. We're looking for sustained organic growth over weeks or months. This proves the project isn't just hype. It has a real growing user base, which provides a strong foundation for a higher price. A project with a bullish chart, big exchange outflows, and a steadily growing user base is an A-grade candidate. But we've got one more check to seal the deal: whale watching. Our third on-chain check is whale watching. Whales are just people or groups that hold huge amounts of a crypto. Because their trades are so large, their actions can move the market, so tracking them gives us clues about what the most powerful players are thinking. Platforms like Nansen or even free blockchain explorers let you track the biggest wallets. We're looking for a pattern of accumulation. Are the largest holders of CoinX adding to their stacks, or are they selling off? A simple way to check is to look at the supply distribution chart. This shows what percentage of the total supply is held by different wallet sizes, from tiny shrimp all the way up to mega whales. During a bullish accumulation phase, you'll often see the percentage of supply held by the largest wallet steadily increasing. This tells you the big players are confident and are using the low prices to build up a massive position. If you see the number of whale wallets growing and the supply they hold increasing, all while coins are flying off exchanges and the chart is turning bullish, you found an incredibly strong signal. It's like seeing a billionaire quietly buying up shares of a company before the rest of the world catches on. So let's review our on-chain checklist for part 2, check exchange net flow. Is the net flow over the last 1 to 3 months mostly negative? This confirms accumulation. Analyze active addresses. Is the number of daily users in a steady organic uptrend? This validates real network growth. Monitor whale activity. Are the biggest wallets buying more? This signals smart money is bullish. If your coin passes these checks too, its potential as a winner just shot up dramatically. Now we've confirmed the chart is backed by real money flows and user growth. Now for the final piece, the hype. We've confirmed our coin has a bullish chart and strong on-chain fundamentals. That's the foundation. But what creates those explosive 10 times or 100 times returns? Hype. In crypto, narrative and social energy are pure rocket fuel. The final part of our trifecta is social sentiment analysis, where we measure the hype meter to see if a project is starting to capture the market's imagination. Now, the goal here isn't to chase a coin that's already plastered all over Twitter. By the time an influencer with 1 million followers is shilling it, you're probably late and you might just be their exit plan. Instead, we want to detect the early signs of growing social buzz before it gets crazy. We want to find the spark right before it turns into a wildfire. We'll use tools like Lunar Crush, Santiment, or even the social tabs on CoinMarketCap for this. We'll focus on 2 key things: social dominance and weighted sentiment. First up is social dominance. This metric measures how much a specific crypto is being talked about online compared to all other cryptos. For example, if CoinX has a social dominance of 1%, it means 1 out of every 100 crypto-related posts online is about CoinX. This is way more useful than just looking at the raw number of mentions because it gives you context. A coin getting 1,000 tweets a day seems like a lot, but if the whole crypto market is on fire and getting 1 million tweets, it's a drop in the bucket. Social dominance cuts through that noise. What we're looking for is a rising trend in social dominance. Using a tool like Lunar Crush, you can chart this over time. Let's look at CoinX again. We pull up its chart and see that for months, its social dominance was totally flat around 0.1%. But over the last few weeks, it has started climbing. 0.2%, 0.4%, now 0.6%. This is a huge leading indicator. It shows the coin is grabbing a bigger and bigger slice of the crypto conversation. Even if the price hasn't popped yet, its mind share is growing. A steady rise in social dominance suggests the interest is organic and sustainable, not just a flash in the pan. It's the groundswell of interest we want to catch. But just because people are talking about a coin doesn't mean they're saying good things. That's why we pair social dominance with our second metric, weighted sentiment. Sentiment analysis tools use AI to scan all those posts and rate them as bullish, bearish, or neutral. The weighted sentiment score then rolls all that up to give you the overall mood of the market for that coin. So, for CoinX, we don't just want to see its social dominance rising. We want to see that the conversation is overwhelmingly positive. We want to see excitement about the roadmap, praise for the developers, or buzz about a new partnership. A rising social dominance combined with a high positive sentiment score is the magic combo. It tells you that more people are talking about the project, and most of them are really excited about its future. This is the feedback loop that creates FOMO and pulls in waves of new buyers. Here's a pro move. You have to do a quick quality check. Don't just trust the score. Spend 5 minutes on Twitter or Reddit and read the actual posts. Is the talk coming from a diverse group of real users and developers? Are people having real discussions about the tech? Or is it just a bunch of bot accounts spamming rocket emojis? Genuine hype has substance. Fake hype is shallow. Finally, look for a divergence between social volume and price. Sometimes you'll see a coin's social buzz and positive sentiment start to pick up steam while the price is still stuck in a range. This is often the calm before the storm. The social energy is building up. When the price finally breaks its resistance level, that pent-up social energy is unleashed, triggering an explosive move. That's the sweet spot we're trying to find. So our final checklist for part 3, track social dominance. Is the coin's share of the social conversation in a clear uptrend? Verify weighted sentiment. Is that rising conversation strongly positive and bullish? Perform a quality check. Does the hype feel real and organic, or is it just bot-driven spam? When a project has a bullish chart, solid on-chain accumulation, and a rising tide of positive social hype, it has passed all 3 tests. You've successfully gone from a vague idea to a high-conviction setup. The trifecta system in action, putting it all together. Okay, we've covered the 3 pillars, technicals, on-chain, and socials. Now let's put it all together into a clear, step-by-step system you can use to find your next big winner. Step 1, the broad scan, building your watch list. This is where you start. You can't analyze every coin, so you have to narrow the field. Set aside some time each week for this. Think of it as your market homework. Action. Open up TradingView. Use its crypto screener to filter for coins with, say, a market cap over $20 million and daily volume over $1 million. This weeds out the tiny illiquid stuff. The hunt. Your only goal here is to hunt for the technical setups from part 1. Scroll through the charts of dozens of altcoins. You're looking for one of 2 things. The golden cross setup. The 50-day EMA is about to cross or has just crossed the 200-day EMA. The breakout setup, the price is breaking out of a long-term range on a big spike in volume. Output, you'll end up with a small watch list of 5 to 10 coins that look technically promising. These are your initial leads. Step 2, the on-chain validation, finding real strength. Now you take that watch list and put it through the ringer. This is where you filter out the projects that have a pretty chart but nothing going on underneath. Action. For each coin on your list, look it up on a platform like CryptoQuant or Nansen. The filter. Run them through the Part 2 checklist, exchange netflow. Is it mostly negative over the last month? Are coins leaving exchanges? If you see heavy inflows, it's a huge red flag. Throw that coin out. I don't care how good the chart looks. Active addresses. Is the number of users in a healthy uptrend? If it's flat or declining, that's another red flag. Toss it. Whale accumulation. Are the biggest wallets buying more? If you see them selling off, it means the smart money is leaving. Toss it. Output. Your list of 10 coins might now be down to just 2 or 3. That's great. You've filtered for projects that have both bullish charts and strong on-chain data. These are your A-grade candidates. Step 3, the hype check, looking for rocket fuel. You've got a couple of top-tier candidates. The final step is to see if they have the narrative power to really take off. Action. Take your final 2 to 3 coins and look them up on a social analytics tool like Lunar Crush. The final check, run them through the Part 3 checklist, social dominance. Is the coin gaining mindshare and trending up? Weighted sentiment? Is the conversation around it super positive? Qualitative check. Spend 10 minutes on Twitter. Search the ticker. Is the community alive? Is there a compelling story or narrative that's easy to get excited about, like AI, gaming, or real-world assets? Output. The coin that checks all these boxes is your winner. It has a bullish market structure. Smart money is accumulating it. Its user base is growing, and it's starting to get noticed. You now have a data-driven, high-conviction reason to be interested in this project. You're not gambling or blindly following influencers. You've done the work and stacked the probabilities in your favor. You've spotted a potential winner before the rest of the market shows up. If this 3-part framework was helpful and gave you a clear system you can actually use, do me a favor and hit that like button. It takes half a second, and it tells the algorithm this guide has real value. And if you want more deep dives like this to help you navigate the crypto markets, make sure you subscribe and turn on notifications so you don't miss the next one. If this 3-part framework was helpful and gave you a clear system you can actually use, do me a favor and hit that like button. It takes half a second, and it tells the algorithm this guide has real value. And if you want more deep dives like this to help you navigate the crypto markets, make sure you subscribe and turn on notifications so you don't miss the next one.